Thanks for joining us at XM.com. This is the week ahead. I'm Cristina Marujos, and with me today to have a look at this data-packed week is our lead investment analyst, Raf Boyajian. Rafi, let's start with the United States. We'll be getting a slew of data releases with PCE core inflation stealing the spotlight on Thursday. Of course, it's the Fed's preferred inflation metric. So do you think the report will justify the Fed preaching patience on rate cuts?
Well, Christina, that is a very good question. And I think it will, because what we're expecting from the core PCE price index, which, as you said, this is the Fed's preferred inflation measure, and it comes hot on the heels of that stronger than expected CPI and PPI reports. The core PCE price index might be a bit of a mixed bag for January. We are expecting potentially for the headline figure to have eased to 2.8%, but month on month the core PCE is expected to have accelerated to 0.4%. So it kind of, I guess, underscores what we're kind of hearing lately, that yes, we're making progress, but we're not quite there yet. So I think, unless there's very big surprises, I don't think it's going to really change that much as far as, where the markets see the Fed rate path. And we're seeing, following that, the run of very strong data, as well as, the hawkish commentary from the Fed, markets are now much more closely aligned with the Fed's dot plot, which is we're heading towards markets pricing in just 3 rate hikes. I think at the moment it's around about 3.5, so we're almost there. So that kind of leaves little room for dollar gains. So possibly we might get a boost for the US dollar from the other data coming up next week, notably the ISM manufacturing PMI. Now that's been stuck below 50, even though everything else in the economy is doing rather well. We're not really expecting a rebound for February, but nevertheless, should there be an upside surprise, and also in overall the other numbers as well, we've got a batch of housing data, the consumer confidence index, durable goods orders. So overall, if it's another string of upbeat numbers, that should be supportive for the US dollar.
Without a doubt, it's going to be a busy week regarding U.S. Data releases. Let's cross into Europe now, Raf. The Eurozone flash CPI is on the upcoming week's calendar as well. What could the report mean for the euro?
Well, this will be the last flash CPI readings before the March 7 policy meeting. So that's actually approaching, it's only 2 weeks away. So the ECB, they've kind of hinted towards a summer rate hike, but they haven't really committed to any particular timeline. And that's because, they don't, like the Fed, they don't want to really pre-commit to any time frame when inflation isn't quite there yet at the 2% target. But we have to bear in mind that inflation in the euro area is much more contained than in the US, because we still have pretty strong domestic demand in the US that's kind of keeping services inflation elevated. That's not the case in the euro area. The economy is a lot weaker. And last time there were fears that Eurozone inflation would head back up to 3%. That didn't happen. It actually came in much weaker at 2.8%, and we could see further decline in February. So should that be the case, then we could see the euro coming under pressure, because the euro has actually staged a rather impressive rebound against the greenback. And so should we see revived bets of the ECB cutting rates before the Fed, that could really pressure the single currency.
Now, Rafi, let's turn to the only central bank meeting of the week. There is growing speculation that the Reserve Bank of New Zealand might raise rates again by 25 basis points. How could that affect the Kiwi?
So that is right. So we've got this, actually we did have a rather hawkish tilt from the RBNZ recently. We had some hawkish remarks from Governor Adrian Orr. So he's worried that although yes, inflation is falling, that it's not falling fast enough, and that there's the risk that inflation expectations might become unanchored. So they can't be certain yet that inflation will hit 2% fast enough. So there's a risk that the RBNZ might buck the trend in terms of what other central banks are doing. They ruled out further rate hikes. RBNZ is keeping its options open. Now, probably we're not going to to get a rate cut. They probably are done. They just don't want to remove that option. But nevertheless, there's a good chance we're going to get more hawkish remarks from AGNO next week, possibly hawkish language as well. And most importantly, they will be publishing their latest monetary policy report. Now, last time they had the report had basically pointed to no rate cuts before the first quarter of 2025. There's a good chance that that timing might be pushed back even further to possibly the second or third quarters of 2025. So even if there is no rate hike, which is of course unlikely, but not just that they don't, we don't get a clear signal of a potential rate hike either. The fact that they would be potentially pushing back the timing, that could be quite supportive for the New Zealand dollar.
And Rafi, before I let you go, what else should investors keep an eye out on this upcoming week?
Well, it's going to be a pretty packed week, as you said. So we're going to get CPI numbers out of Australia and Japan. Now in Japan, yes, the numbers will be important, but of course, the Bank of Japan at the moment is focusing more on the wage negotiations, the spring wage negotiations that take place annually in Japan. So we know that CPI is at the moment heading down. It's expected to drop to 1.8%, but market reaction will probably be limited. Of course, that's not going to do the yen any favors, because of course it's on the back foot at the moment. But I don't think we're going to get a strong reaction, because I think everyone's waiting for the outcome of the wage negotiations to see what the Bank of Japan will do next. For the Australian dollar, that's another currency that's kind of been rebounding rather nicely against the US dollar. So the CPI numbers will be important, along, of course, with some Chinese PMI numbers as well.
Rafi, thanks so much. This was The Week Ahead here at xam.com.